Good morning, and welcome to episode 111 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, February 22nd, 2023. The most recent numbers for inflation have come out. Both the PPI, the Producer Price Index, and the CPI, the Consumer Price Index, came out at or above 6% year on year. As a result, investors got spooked, markets got spooked, and we saw a sell-off of pretty much everything. The equities markets, precious metals to some extent, as everybody assumed with inflation kind of backtracking and going up again, that the Fed is going to have even greater resolve toward raising interest rates further than everybody wants them to. They really want this to be a pause and a pivot and let the party begin again, but we're not even above the rate of inflation with our interest rates. Nobody in their right mind should have thought that this was going to be the end. The concern is, when is enough? We can't get there, I've said this before, because in order to get above inflation, the service on the debt, the cost to pay down that interest on the debt is going to be way too much because we have a $31 trillion debt. That's the problem the Fed's faced with. But the markets believe that they will go higher from here, and that's put a bit of a damper on the markets. Precious metals have not been immune, like I said, but they have been holding up pretty well. We're actually seeing a bit of an increase week on week. Let's take a look at the numbers. Gold today is at $1,839.70 an ounce. That's up 0.1% from $1,835.90 last week. Silver's up almost 2%, 1.9% at $21.96, 40 cents above last week at $21.56 an ounce. Platinum is at $9.59 an ounce this week, up 2.6% from $9.35 last week. And palladium is up 3.8% to $15.98 an ounce from $15.40 an ounce last week. With silver outpacing gold, the gold-silver ratio is down a little to 84.11 versus 85.54 last week, and the dollar continues to surge a little bit, flexing those muscles. It's up to 104.33 on the index from 103.50. You know my thoughts. I do not believe this is going to be a long-term trend for dollar strength. I think this is a little blip in a bearish run for the US dollar, and you should take advantage. Looking forward, we're continuing to see consumer debt soar. We just got word out that Walmart beat expectations, and that should tell you that people are looking to Walmart as a discount option in tough times. They're trying to stretch those dollars. In addition, we just found out that rents are now 30% or more of the budget for households that are renting, and that's the highest levels we've ever seen. It's basically creating a picture where more money is going to needs as opposed to wants. I've said this, I know you've heard me say this before, because wages are not keeping up, and as a result, we're going into debt to pay for what we need from day to day. On top of this, there are dire warnings out there about the energy concerns going forward, that we can't break away from fossil fuels, but we're being forced to by governments around the world, and as a result, because of the cost of the alternatives and the fact that they cannot make up the difference of fossil fuels, there's some really sad, grim warnings coming out about the impact that's going to have on the economy with rising energy prices on top of everything else. There are tough times coming. Make no mistake about it. I told you, this is an environment where everything you own, all your assets are falling in value while everything you need is rising in cost. There's no better antidote for this situation than to preserve your purchasing power with a temporarily strong dollar by buying gold right now. Make no mistake about it. The government is not going to stop spending money. They're not going to stop inflating the currency in order to cover their overspending, and therefore the dollar is going to continue to lose value, and you need to preserve some of that purchasing power. Gold is the best way to do it that we know, period. As always, we'd like you to go ahead and follow us on our YouTube channel and like us, send us your comments and questions. Follow us on our monthly newsletter information line and our twice weekly alerts, always something interesting. Follow us on our social media channels, but don't ever forget that getting rich starts with keeping what's yours.